American Airlines reporting quarterly results. Let's get right to Phil, Planes, Trains, and Automobiles LeBeau. He has the numbers.
Steve, this is a beat on the bottom line for American Airlines in the third quarter, earning 38 cents a share. The street was expecting 25 cents. Record quarterly revenue coming in at $13.48 billion, roughly in line with expectations of $13.52 billion. Total revenue per available seat mile and passenger revenue per available seat mile, both of those down 6.3% in the third quarter. Cost per available seat mile, excluding fuel, that's important here, up 3.3% in the quarter with a margin of 5.4%. The guidance, which is what so many people are going to be focused on, in the fourth quarter, American Airlines expects to be break even. The street is expecting a slight profit of 7 cents a share, with capacity increasing 4.5% to 6.5%. And for the full year, American Airlines expects to earn between $2.25 and $2.50 a share. Right now, the consensus is at $2.32. Lots to discuss with American Airlines CEO Robert Isom. As you take a look at that chart, that is one ugly chart, and we've seen this for all of the airlines. Pessimism from investors about the state of the airline industry, the cost of fuel, cost overall rising, and what's the outlook for the fourth quarter? We will discuss it all in the next half hour with American Airlines CEO Robert Isom. Guys, back to you.
Hey, Phil, I just want to tighten up on this guidance thing. It sounded like they were break even versus 7 cents, but the full year sounded like it was right in the middle of the guidance. So is this terrible guidance or is it okay guidance? How do you judge it?
It's okay guidance. It's okay guidance. It's not a surprise. There's nothing in here that will make you say, oh, my goodness, the sky is falling. Where is this coming from? It's out of left field. The street was expecting, look, they had a huge third quarter last year. So these numbers are, it's tough comps, basically. And then when you look at the fourth quarter, it was a big fourth quarter for them last year. So the break even is not a huge surprise there. And the 232 consensus versus they're expecting to come in 225 to 250. So it's, roughly speaking, it's in line with what Wall Street is expecting. But by far, there's pessimism when it comes to the airlines right now, as far as investors are concerned.
Phil, you know what I care about, which is this the consumer is gone, or is this an internal sort of profitability issue relative to fuel costs? Are they getting the traffic? Does it tell us anything about the consumer and travel here?
They've got the traffic there. They've got the traffic there. Now, the question becomes, what are you seeing at the lower end of the market? And we've talked about this yesterday with United, and we talked about it last week with Delta. You are seeing a split within the airline industry. The premium providers and those who have international exposure, American, Delta, and United, they've got pricing power there. And they have people who are paying up for premium seats. Lower end of the market, you don't have that. And that's where we're expecting to see losses in the third quarter. At least that's the expectation from analysts, that you will see losses with the low-cost carriers in the third quarter. So definitely seeing a split in terms of investor expectations when it comes to the airlines.
Phil, thanks so much. Yesterday, the Beige Book, by the way, said declines in the consumer end of things, but increase in business travel, which is exactly what Phil just reported.
Yeah, United talking about that as well this week.